Apple just announced some new products and services that I think should help boost certain parts of their business and help the stock outperform over the long term. However, there are still some concerns that I think should be addressed. So let's go ahead and talk about Apple stock heading into the future. What's up, everyone? My name is Ale. Welcome back to my world of stocks. Let's not waste any time. Let's go ahead and jump right into their most recent announcements. So during the annual product launch, Apple announced new iPhones, a new Apple Watch, an iPad, and even new information about their upcoming services in Apple TV Plus and Apple Arcade. Now, the two services are important because we've been seeing Apple transition in recent history to trying to grow that part of their business out to help offset the decline in iPhone sales. As you can see here, their iPhone unit sales used to be on fire for many years before beginning to plateau in 2015 and the years to follow, mostly due to them charging higher prices for not enough of an upgrade. On one hand, that does raise the average selling price, which is how they've kind of helped offset the lower unit sales, but it also lowers the unit growth, which, is kind of a trade-off. And because iPhones are their biggest segment, it's limited their overall revenue growth as well over the past 4 years, as you can see on this chart right here. In fact, over the last 9 months, their iPhone sales have actually dropped by almost 15% year over year. However, other areas are trying to pick up the slack, like their services business, which is currently their second largest segment that grew by almost 16% year over year, and even their wearables and accessories segment that includes the iWatch is growing at an even faster rate of almost 37% year over year. But going back to their services for a second, they announced a launch price for their Apple TV Plus, which launches in November for just $4.99 a month, and that undercuts practically all other services out there, like Netflix, which charges $12.99, or even Disney Plus, that charges only $6.99. Now, it can certainly be argued that the content will not be as good as what Disney or AT&T, when you look at their acquisitions of Time Warner, and they have HBO and all that kind of stuff, what they have to offer thanks to an enormous backlog of content. But they are at least spending a couple $2 billion to include content from Oprah, the guy from Aquaman, which I always forget what his name is, but it's like Jason Momoa or something like that. But anyway, a show starring Steve Carell, Reese Witherspoon, and Jennifer Aniston, just to name a few. Personally, as a Disney, Amazon, and AT&T shareholder myself, I may be biased in saying this, but I'm not really worried about Apple's content as a threat, because Disney and AT&T in particular have huge backlogs of content thanks to major acquisitions of Fox and Time Warner. But Wall Street seems to disagree with me and feel that Apple beating on price is a big deal, as their stock closed the day up by over 1%, while Disney slumped by over 2%, Netflix also dropped by over 2%, and then to my surprise, Roku actually dropped by over 10%, and I really feel like Netflix should have probably taken a bigger hit than Roku, since Apple TV Plus will actually be offered on Roku platforms, so you would think that Roku would actually benefit from having another service on their platform. But on the other hand, it's a stock that is already up by close to 400% this year. Roku has been absolutely on fire, guys, and I get comments all the time asking me to review that stock, so maybe I should make that video. But on top of all of that, Apple is also offering a free year of Apple TV Plus if you purchase one of their devices that can do this, can pretty much do the same thing that Roku can, especially when you purchase an Apple TV device that is considered a complete replacement for something like Roku. Either way, the video streaming market is growing by billions of dollars a year, so I actually think that this may turn out to be a very wise investment for Apple, because I think there is actually room for multiple competitors in this space. Most people have Amazon already just by having Amazon Prime, and when you look at something like maybe adding Apple TV Plus to that, or maybe you also add Disney Plus, you can have multiple different services and still be paying kind of the same price for Netflix. So I feel like Netflix has kind of had this like monopoly for a while, and I really think that time is running out for them, because I know for me personally, I'm definitely signing up for Disney Plus, and I may even sign up for HBO Max from AT&T. So there's definitely a lot of options out there, and if I was somebody who was invested in the Apple ecosystem, I would also consider Apple TV Plus, especially if you get a whole free year for upgrading, your device and getting some kind of Apple device. But either way, that's not the only service that they'll be pricing for just $5 a month. They also announced their Apple Arcade service, which will launch for the same price in September with over 100 brand new games to start. And this has some decent potential as well because it undercuts the standard price of both Google Stadia and Microsoft's Xbox Game Pass by about half the amount, although there are technically other pricing options available, but that's just kind of the standard. So this could be a big deal considering the gaming market is also growing by billions of dollars every single year. However, to my knowledge, I don't think that Apple will include AAA big budget games like the other services offer. So we'll have to kind of wait and see how well it does. But my guess is that it will probably do very well because if you look at the growth in the gaming market, it's actually mostly coming from mobile gaming. And because so many people are already invested in using Apple's ecosystem, especially the iPhone, it may be very tempting to just pay like an extra $5 a month and get a big library of new games to play on your devices that is growing more every single month. They mentioned that they will be adding more games every month. And actually, from looking at some of the trailers of the games, some of them actually look pretty cool. So I could definitely see some people who own Apple devices who are also into gaming. They, $5 a month is not really that big of a price tag to be able to game on all of those devices as well. And the great thing about offering so many different services at more affordable prices is that it just makes their overall business a lot stickier. And it also encourages people to upgrade their existing devices and purchase new hardware devices as well, especially when you're bundling them with a free year of a certain service, which is what we're seeing with like the Apple TV Plus, for example. But speaking about devices, let's go ahead and transition now and let's talk about their hardware announcements like the iWatch and the new iPhones as well. Now, we already talked about the growth that they're seeing in the Apple Watch, but they're now releasing the Series 5 for $400 with GPS or $500 with 4G, and both come with an always-on display that still lasts 18 hours thanks to a new OLED display and driver. But perhaps an even bigger deal is that they're also going to cut the price of the 3 series down to just $200, making it a little easier for iPhone users to get their hands on one of these iWatches. And at this point, I think we'll eventually see most iPhone users pairing their phone with a watch to go right along with it. And again, that's exactly what Apple wants. Because it makes their entire business a lot stickier. Now, when looking at their iPhones, they actually weren't that impressive in my opinion because it was mostly a spec bump, but it didn't really offer like a lot of innovation. There's 3 new models, the 11, the 11 Pro, and the 11 Pro Max, and these all come with faster chips that offer better performance with better battery life than their predecessors. And the 11 Pro and the 11 Pro Max also have triple lens cameras that let in more light, have a greater field of view, and can record 4K at 30 frames per second. Don't get me wrong, all of those things sound great, but I actually think that the standard iPhone 11 is the most appealing because it only costs $700 versus $1,000 or more for the other models. And you're really only giving up the camera, but you still get the same really fast CPU, which they claim is the fastest CPU and GPU ever in a smartphone. And it's also $50 less than what its predecessor costed when it launched. And it comes in 6 different colors. So it's actually cheaper. They actually brought down the price. And with certain trade-ins, you can actually get it for even cheaper. So it's very clear that Apple is starting to realize that they need to keep their prices competitive if they want to retain market share. And I think it's exactly what they need to do in order to keep the business sticky so that they can sell as many services as possible to their fan base. And if you need further proof that Apple is taking pricing more seriously, just look at all the lobbying that Tim Cook and Apple has done throughout this year, trying to convince President Trump to give Apple exemptions from the new tariffs. And the crazy thing is that it's actually been working so far, as iPhones are not part of the newest round of tariffs, although wearables like the iWatch and the AirPods are part of it, but those make up far less of their revenue as opposed to the iPhone. Now instead, the iPhones won't be impacted until December 15th if the trade war continues, which it looks like it probably will. And as a report from BBC points out, 92% of Apple's hardware would face levies at that time, so it's a very big deal. Now, from my understanding, we still don't know how all of this will exactly impact Apple's prices, but given that they're putting such a big focus on lower prices for their products and services, it may be safe to assume that Apple will try to eat the costs themselves, and that would obviously tank their margins and hurt their profitability. I know they've been trying to get their supply chain kind of out of China, but it's very difficult when you're such a big company like Apple. It takes quite a lot of time. Still, even with these headwinds, Apple should remain a very profitable company, as they brought in over $60 billion of net income last year and have a very strong balance sheet with $135 billion in current assets alone that should help them survive any of these headwinds and keep investing in growth. Speaking of which, I actually think that the majority of their growth is yet to come when they launch their 5G handset, which will probably be near the end of next year. And in the meantime, their valuation isn't too expensive, at least in my opinion, because it's less than 17 times forward earnings for a company like Apple, and you also get a very nice dividend of 1.4% that also has a lot of growth potential, as their payout ratio is only 26% with a double-digit 5-year growth rate and 7 years of consecutive growth. So that could be a decent dividend growth stock as that dividend grows out over the years into the future. Still, my gut tells me that the market is probably overdue for a decent sized correction given the escalating trade war that seems to have no end in sight. Now, when looking at Apple, the thing about Apple is that I really believe in them as a company long term, and I love everything that they're doing, and I actually like a lot of their announcements. I like the focus on more affordability and offering their products and services at more affordable prices so they can get more people to get into the ecosystem, and then they can really monetize that, and they can collect more revenue from all of those people. So it's really about increasing market share and just making sure that you get people in and then you keep them with a very sticky business with affordable prices and an entire ecosystem of devices and services. So I like their entire model. And for a company like Apple at its size, I actually think that their valuation is actually pretty fair when you consider that you're getting Apple, one of the biggest companies in the world. However, because Apple is a tech company that is heavily exposed to China and the trade war, I feel that the valuation could use a little bit of a dip to reflect a lot of that increased risk and uncertainty associated with the company and their business. Because when you look at Apple, actually one of their biggest markets is China itself. So even if the trade deal gets resolved, you still have to deal with the Chinese economy kind of struggling. Now, I do think that a trade deal would help the Chinese economy. So you kind of kill two birds with one stone there in terms of lowering tariffs and having a improved economy in China. But it's still a risk that you have to consider, and it just doesn't really seem like we're going to have a trade deal done anytime soon. Now, having said that, I do think that a trade deal will get done eventually. So if you're a long-term investor, you could be looking at this as just some short-term headwinds. And I think Apple is one of those companies that I think is ultimately a buy on every kind of dip. But when you look at their performance so far this year, they've really performed very well so far. So I don't necessarily consider Apple to be in a sort of dip right now. I think they could go a little bit lower before you really start to feel like you're getting a nice value in return for the money that you're paying. Either way, for me personally, this isn't really a stock that I want to buy right now. It is actually a stock that I'm interested in, and this is coming from someone who is an Android user and a Windows user, and I've never been interested in Apple products, and I still see their business. I can look at their business objectively, and I can realize that they're actually doing all of the right things when you really think about it. But there's just too many short-term headwinds to really justify buying the stock at this time, in my opinion, just my opinion. But I should also clarify or give you the disclosure that my girlfriend actually owns Apple stock, and it's one of her biggest positions. However, she purchased the stock when it was much cheaper. Like, her average cost is insanely cheaper. She's up a huge amount on Apple stock. And she hasn't purchased the stock recently at all either. But I kind of feel like I own Apple stock through her, so that's why I've always spoken very positively on Apple stock in recent videos. If you go back to my earliest videos on the channel, I think I was a little bit more negative on Apple, but lately I've become more positive on Apple. But because I kind of feel like I own the stock through my girlfriend, I just don't really feel like I need to buy it. And I know that's kind of a weird thing. I don't want to get all into that, but I think that when they release the 5G phone, I think that will encourage people to upgrade their iPhones. I think even right now you're getting a decent value when you consider the cheaper price of the iPhone 11 kind of standard. It's cheaper than when their predecessor launched, so that's kind of crazy that the price actually went down. It's actually what they kind of need to do, in my opinion. and you still get kind of a decent value as well. Even if you trade in a phone, you get an even better value. So I think that they're doing the right things right now, and I think services will help bring up the revenue in kind of the short term as well to kind of help offset some of the headwinds. But profitability could absolutely take a hit because of the tariffs, and that could really drag down the stock. So I see risk there. But a company like this, with what they're doing and with 5G on the horizon, if a trade deal gets done, you're talking about a stock that is absolutely worth owning. So there's so many ways you could look at this. You could look at this as, well, I'm just a long-term investor. I see the opportunity and I would like to buy the stock now. But for me, I still feel like the stock could use a little bit of a dip. I still think that a dip is justified because of the increasing tariffs and escalating trade war, and there's just a little bit too much uncertainty there, and I think the stock price should reflect that a little bit more, in my opinion. But that's just my opinion. Either way, I still think that this is a great company for the long term, and I remain very bullish on Apple. But I'll let you guys know if I ever do decide to buy the stock, and I'll also let you know if like my girlfriend sells out or anything like that. I'll give you guys an update. But who cares what I think, guys? I would love to hear your opinion and your thoughts down in the comment section. Make sure you leave that. And if you enjoyed the video, please consider hitting the like button. It really helps the channel survive and grow. But I'll catch you guys in the next one. Take care. Bye-bye.